Okay. The other theme that seems to be taking a lot of attention also is AI. And last year, this time, as you know, when we were talking, Donald Trump was about to come into office, and there was a lot of questions as to where 2026 was going. Now, with the benefit of hindsight, a lot of discussions regarding AI and a potential bubble that we're in the market. What are your thoughts about that?
Yeah, we are probably in a bubble, but the thing with a bubble is we just don't know when it's going to pop and how big it is going to get. But to the extent that folks are looking at the 2000.com episode as a guide, we're certainly not there with AI-related stocks. One key difference is that those companies are funding their CapEx with their cash flow.
Okay? Unlike 2000.
When it was mostly with debt.
Right.
Okay, that's number one. Number two, they generate a lot of cash flow, which they're using to finance most of their CapEx, but they're not like overspending. They're not burning cash. The model or the business model, way more solid than in 2000. And lastly, which is probably the most important factor, for a bubble to pop, you normally need a tighter monetary policy, higher increasing interest rates, putting pressure on valuation, putting pressure on the business cycle. We have the opposite right now. We've got the Federal Reserve easing the government also spending and about to do a little bit more in 2026 with a big, beautiful bill. So it's really rare for valuations to pop or to compress when the government and the central banks are easing, not only in the US, but around the world as well.